My name is Garth McKenzie. I'm a technical analyst and an ETF strategist with traderscorner.co.za. Today I'm taking a look at the S&P 500. It's rallied very hard off the March lows. We're now pushing up into some fairly meaningful resistance, and it's also a very big week in terms of earnings looking forward on the S&P 500. So let's take a look at the first chart, and that is a weekly chart of the S&P 500 that now goes back all the way to the beginning of the bull market in 2009. And what's notable here is that the market broke down below that bull trend in early of 2020, and we've now seen this massive rally back up. And it now appears as if the market is giving a throwback into the underside of that previous rising trend. So it's an important level now to decide whether the market can actually break back above that uptrend and continue higher, or whether it actually begins to stall here. The next chart is also a weekly chart of the S&P 500. It's just zoomed in over the last 2 years worth of trading history. And what I particularly want to focus on here is the weekly 50-week moving average. That is, to me, always a good indication of whether we're in a bullish trend or a bearish trend from a bigger picture perspective. And the thinking is that if the market is below the 50-week moving average and the 50-week moving average is pointing downwards, that is a bearish signal. And if it's pointing upwards, then that is a bullish signal. So as you can see at the moment, this market is below the 50-week moving average and it's rallying up into the underside of that 50-week moving average. That comes in at around about 3,000, and it also coincides more or less with the 61.8% retracement of the recent sell-off, which comes in at about 29.35. So we're going to need to keep a very careful eye here and see what happens at the underside of that 50-week moving average and whether the market actually breaks through there or whether it succumbs to some resistance in that area. The next chart is a daily chart of the S&P 500. Here you can see the rising wedge pattern that has been forming over the last couple of weeks quite clearly. What's interesting to note here is the 200-day moving average, which is highlighted in red there. And that also comes in at around about 3,000. And similarly, you can see the 61.8% retracement of this big sell-off comes in at around about 29.35. And that's going to be a big zone of resistance potentially to watch in the week ahead to see how the market reacts around this important area. My final slide today takes a look at the earnings that are expected this week. And as you can see, it's a very, very big week in terms of expected earnings. These are all first quarter earnings coming out of the US this week. Massive number of very, very big weight companies. Some of the really big ones to watch will be Amazon, Microsoft, Apple, Facebook, the big heavyweight stocks that have really led the rally on the upside in the market recently. So we need to see what those companies' earnings look like, particularly because the breadth in this market rally hasn't been great. It's really been led by the big cap players, and we're going to need to see how those ones perform and how the market responds to those, and particularly look out to the second quarter earnings of 2020. That's all I've got time for on this episode. I'll be back again later in the week with some more market analysis.